one more time. We didn't quite make it last night. So did get some moisture, did get some high winds. Not enough moisture to make any difference, but winter is on the way. We can kind of feel it in the air. And there's no doubt when you step outside now that you feel heat leaving your body, not being added to it. And a lot of that has to do with that global warming issue, the sun. When the sun is far south on the horizon, things do cool off. So we rallied last night on strength. London's high retested the 26-28 area it held, and we've been drifting lower ever since. The E-mini hit its low in London at 12.13, 12.15, and we're drifting higher. We've got that day session gap, 12.40.250 to 12.45.50, that the E-mini is trying to fill. So we'll see if that actually happens. E-mini up, note and bond down, but you won't break the note and bond because of the problems. Potential problems in the U.S. stock market and out of the EU. Last night, the equities got all excited about France and Germany putting their foot down excuse me, with Greece, and they basically have said either in the EU or out. If you don't stay in the EU, we're not going to give you any more EU money, and that would make sense from the EU standpoint. So if you were Greece and you could get rid of almost all of your debt by getting out of the EU, devaluing your currency and the rest of it, you got a chance for a clean start if the character of the country supports that kind of thinking. Like, get out, roll up your shirt sleeves, go to work, get rid of a lot of this government regulation, etc. 70% of the Greek population would like to stay in the EU, and if I had a rich uncle like that and couldn't control my spending, that's probably a pretty comforting thought for many in Greece. So it's a tough issue. I don't know how it'll shake out. My guess is that when it's all said and done, when Greece runs its referendum, that they'll probably opt to stay in the EU and continue what they've been doing, saying, yes, we're cutting spending here, here, and there, and then when it gets down to it and they go back and look at it, well, they didn't really cut all that much. So a body in motion tends to stay in motion, and that's the way Greece has been playing the game ever since they were admitted to the EU. That probably will go on. So austerity imposed by the EU on Greece is probably what we'll get off the referendum. Now, G20, Obama has leaked that he's going over there to really push for the EU's support and backing of Spanish and Italian debt, and that's been the rub. The EU could absorb Irish, Portuguese, and Greek debt and still stumble along, but they can't absorb Spanish and Italian debt. When you look at what Berlusconi is trying to do in, if I pronounce his name correctly, in Italy, they're getting a lot of pushback, and the Italians have shown that they're not afraid to march and burn things and break things either to get their current way. Like dealing with adolescents in a lot of ways, like children. And so my guess is China will not step up and show strong support and their willingness to bail out Italy and Spain and the rest of it in any meaningful way. And all these countries are, you finally get to the point where you got to accept the fact that you got a bad trade. You got to take your losses and take your lumps and start all over again. And we've had 50 years of social engineering and top-down control out of the continent that is going to be unwound one way or the other. So, and it won't be pretty at times. My guess is we get strong rhetoric out of G20. Not much else will change. Our Fed will continue to back the European Central Bank when they need dollars and vice versa, make loans to their banks. And everybody will try to muddle through with Greek, Portugal, Ireland, Spain, and Italy having to bite the austerity bullet. So what does it take to go higher? To stay and hang above this 130.16 area, I think it takes help out of the EU or the E-mini flight, keep the flight to quality issue going. I think given the magnitude of the problems and the potential for economic slowdown in the United States, that you're not going to break the note or the bond either. And Bernanke yesterday in his press conference said we may keep interest rates right here until 2013. So with the Fed keeping interest rates at 0.25%, we can sell, but you can't sell all that much. So here we are. The best resistance is above 13.16. The desired sell would be that 130.11 to 130.15. Leaning against that area to allow us to get up there, get failure, and come back down. The best support is probably 129. 16 to 20, but we've rejected prices below 29.28. So we can probe down into that 24.28 area pretty easily, but we may not be able to break it. This morning's news, jobless claims projected at 400,000. Greater than 410 helps the financials, hurts the E-mini. 390 or less helps the E-mini, hurts the financials. 400 still shows that the economy is losing jobs. Then we have preliminary productivity called at plus 2.8%. That would reflect lean, mean operations business-wise and buying machines as opposed to hiring people. Unit labor costs called down 1.1%. That would reflect the weak job market. Then we have factory orders called at minus 0.2% due to a smaller fewer orders for aircraft, and then probably the big number is ISM services at 53.8. We continue to lose manufacturing jobs. Our economy is service-based. We have to have people over here to fix what others manufacture for us. So I think that number will get extra scrutiny, and if it comes in less than 53.3, I would expect financials to be supported and the E-mini to get hit. So we do have news this morning. The E-mini's reaction to that news likely is to tell the tale of the tape. Both markets are probably on hold until G20 has spoken. Isn't it amazing how, the can keeps getting kicked down the road? No announcement on Sunday. We would have an announcement on November the 3rd. No announcement on November the 3rd. We have G20 this Thursday and Friday. No announcement probably from G20 other than rhetoric, but we have the Greek vote on December 4th or 5th. And it just goes on and on and on as the politicians effectively, as far as the markets go, kick the can down the road. But at some point, this market will reflect reality. And that's when the correction starts for real. The argument on the stock market is between stocks are as cheap as they've ever been. What are 2012 earnings going to be? And they can be pretty good with a world economy that's not shrinking because of the cost cutting that's been done. Okay, looking at a pretty clean break in this market. You can see it's at 12. So our 11 to 15 comes from selling this area. We are seeing lower highs. The next clean break in the market would be in this 05, 06 area. And so it may take 3s to 7 to get in, but this would be an area I think that would offer us an advantage. 3s to 7s would be pretty aggressive, and we do have some news on the half hour. Down below, support starts in that 29.28 area, and the best support's at 129.16 to 20. We'll watch this number right now. You can see that ever since London came in, we've been in a slow sell-off, and on our pain number 2, there's more action on the selling than there is on the buy side. On our cumulative volume and tick chart, the eventual F6 chart, it shows selling. All 3 markets are congruent. Okay, I don't think today we break out the stock market or break down the bond market, just due to the nature of the news and the magnitude of the problems. Now, looking at this screen, we've got this 47 area to 54. And you can see that probe into that area was in the 46 area. So about 50% of that would give us a 1250. And that's probably where the market is headed right now. Getting stops above the overnight sessions high, or the Y through A, is possible, and getting stops above that Q period high at 48. So you can make a case for 50 plus or minus pretty easily. And then at that point, you know, the overnight sessions low was 13, so 13 to 50, you're looking at that 40 plus point range. Amazing, isn't it? $2,000 possible and potential, and we see it damn near every night in this contract. I mean, that's just unreal opportunity for traders. So 42.50 to 45.50 is the day session gap that we're looking at. So that's probably all we need to get up to 45.50. 46 and stops above 12.50 would be the next play. Do have news on the half hour that we have to navigate, and jobless claims is called at 400,000. So where might resistance lie? Oh, 45 plus or minus, 50 plus or minus, and then our 55 to 57, picking up this area here. So we've had that spill from 57 is within reach depending on this morning's news. 48 to 50 is another area. And then we have our 45, 50, 46. That will close the gap for day sessions. To the downside, we've got, and we're at 43 right now, we've got volume at 38. Got a little bulge down here at 35, so that would be the first little area. Then we've got low volume down here at 27, weighted volume mean at 31, that would be the second. And then we have this mom down here out of 20. Should be the third. So looking for a range-bound trade. I don't see any problems getting up to 50. I do see problems when we get above that. First little band of opportunity, I think, will be this 45, 46 closing the day session gap, and then we'll pick it up from there. So 44.50, give it a little bit of room. 46.50. and then 49.50, 51.50 is where I would see the selling set up. And we do have news. Don't forget that. And on the buy side, I think that 30 to 35 is probably our best little spot. So 35, 37, and then 30, 32 based on the idea that G20 will hold us in a trading range. And the news is close to expectations, so we'll see how she plays out. Got 63.93 from the large player on the buy side. That's pretty big for the overnight session. And guessing if it's real buying or just program buying, we don't really have to know what it is, but it's like trying to guess whether we had a good auction or not with the way the Fed plays games these days. So we're up here, we're higher, we're looking to close that gap, 45.50, 46. Everything on this screen is pointed up. The 50 lot player is on the buy side, and pretty strongly so for the overnight. Now we can fade this 50 lot player. I don't have any problem doing that. The issue is that without this 50 lot player, you're not going to get follow through. So there's good trades from if this 50 lot player is buying or selling, fading that, but you kind of look for the move to be contained, maybe 5 handles, 5 points, max maybe 7 or 8. So this is what, if we can get the 50 lot player going to the short side, then the short has a better chance of developing. If we don't get the 50 lot player going to the short side, we can sell at our levels, but you got to get pretty quick follow through to stick with the trade. Everything on this screen says higher. So you're getting higher lows, and those are producing higher highs. But you can see that we're starting to lose some momentum too. We have a pretty steep slope here. We're not getting much action up here. So we have news on the half hour. Jobless claims 390 or less, supportive 410 or greater, not so, called at 400. Don't think anybody pays attention to preliminary productivity, call it plus 2.8, or unit labor costs at minus 1.1. Factory orders, they always look at the aircraft component. It will be discounted for that, but they will look into the categories in that. But I think the next piece of news after jobless claims is ISM services. Greater than 54, the market will like it. Less than 53.5, it won't. Then we'll go back to what are they going to do at the G20 with, and will they give in to Obama's call for support for Spanish and Italian debt? My guess is they probably won't. Who's going to pick up the tab? So with that said, let's go to work. Let's see if we can make some money. 44.50, 46.50, then 49.50, 51.50 for the buy zone. Basically 35 plus or minus, and 30 plus or minus for the buy zone. Okay, later.